Yo, what's happening, guys? Welcome to my first YouTube video. So I'm just gonna quickly explain how I took this trade on Thursday, making me over $3,000. Now starting on the weekly, I'm just going to do a top-down analysis to explain the trade. So starting on the weekly, we actually see that price now had reacted from discount. And how do we see that it's in discount? You anchor free from the low to the high and see if price traded below the 50% level, and price did trade below the 50% level, which now confirms that it's in discount. Then what do we have in discount? We have this FVG. So price tapped into this FVG, which is in discount, and rejecting higher from it. Now going into the daily chart, after we saw a reaction from that weekly FVG, my only interest higher was this segment in price, of which we call a volume imbalance. The bodies are not overlapping the gap between the two candles here, so the gap is lacking a candlestick body. That means at some point this will be revisited because there is absence in volume imbalance. So this was my interest higher. So now we saw price trade right into the volume imbalance. After trading into the volume imbalance, I had no bias, to be honest, and I waited to see what price does. We saw a rejection from that volume imbalance going lower, and when going lower, my only interest lower was to see price take out the lows that we have here, the sell side liquidity only, because what we have here is a balanced price. I didn't expect to see price trade much lower to take out these lows here that we have under the right on the weekly FVG, right? Because price is just balanced here. We had a back and forth here. So price, if price had to continue lower, it would be a struggle to go through this area right here because price is balanced. This is why we saw a trade lower, take out the sell side liquidity and trade higher. And also, if you anchor your fib from this low to this high, we could actually see that price, when it traded lower after taking the sell side liquidity, it was in discount. So it makes sense why price just ran the sell side liquidity, then continued much higher. Okay, now continuing to the 4-hour chart, um, what we have here, we saw price trade lower, taking the sell side liquidity that I showed you in the daily chart and going into discount. What do we have in discount? We have this large candle here, and this candle is actually a BC. So with this BC, when price created this low, it left a remaining portion of the BC. So I did mention in the Discord that price has to trade into the remaining portion of the BC if it wants to go lower, but I'm not expecting to see it trade much lower into these lows. So I'll wait to see what price does. And what happened is that price now traded down into the remaining portion of the BC and rejected right from it, continuing higher. Now, continuing higher, I need you to focus on what we have higher. We have this segment in price here, a volume imbalance, another volume imbalance, and the relative equal highs. Now, as I mentioned, that here we have a balanced price range. Is it much easier for price to continue lower or continue higher? Here we have a balanced price range, so it's likely going to struggle going lower. And here we have the segment in price right here, volume imbalance here, and also here, and also the relative equal highs. So it makes sense why price now trade higher, because we have so much buy side liquidity here and volume imbalances to fill, of which we know that volume imbalances like a body candle, a candlestick body, I mean to say, here and also here. Now, when price continuing high, it also created a segment in price. But where are we focused on seeing price to go to? Relative equal highs. So does it matter to me that price has to fill this immediately? No. Now go into the hourly chart. On Monday, we saw price take out the SSR liquidity there as expected and trading into that remaining portion of the BC, then rejected from it, going higher to fill out the volume imbalance that we have here, and also had a price run to fill out this volume imbalance right there. So now what's left? What's left is the high and also the relative equal highs that we have here. Now going on to how I took the trade to explain that Thursday trade. This is Thursday from here to here. This is all set. This is all Thursday price action right here. So what we saw is that during the London session, we saw price now take out the sell side liquidity that was engineered inside this new day opening gap, which is a volume imbalance. This is a new day opening gap, by the way. I didn't include as much information because I'm trying to explain how you can also take trades on the 15-minute or the hourly chart, right? This is how my chart looks like every time I stream and trade much lower on the lower time frames where I take trades on the 1 minute and all those things you see on X that I'm doing, right? I'm just explaining this CFD trade, not the futures one, because I think this could open more people's eyes, if I can say, yeah. So now, price did take out the source side liquidity inside, trading inside that new day opening gap, right? What do we know about new day opening gaps and new week opening gaps? Is that they could act as support or resistance. So in this case, I'm aiming to see higher prices. So I should expect to see this new day opening gap act as support. So in this case, we saw price after taking the sell side liquidity, then continuing higher. Now continuing higher from here, we saw a price now trade above these two consecutive candles, which is now a changing state of delivery because price was just going lower and it decided to now trade much higher, leaving these two consecutive down candles as an order block, right? Now, and going higher, it traded inside this FVG right here that we have, then rejected lower from that FVG to tap into that two consecutive candles of which is an order block. Now going higher, this is where I had my trade from here. But again, what made me confident is that if you think of this in the perspective of a power of three, what you'd really have to have from the midnight open, if you think of a power of three, you have the open, the low, the high, and the close, right? So if you have a bullish day, you want to see, or I expect London create the law of the day 70% of the time, right? So in this case, price now traded lower, taking out the sell side liquidity when during the London session, forming what? The that low of the day. So this makes sense. We have that accumulation right here, manipulation, taking out the sell side liquidity, making people think this should continue lower. And now during the AM session, the New York session, price now railed higher as an expansion, right? Of which makes sense if you think of it in a power of three perspective of how we had this trade on Thursday. So price, okay, yeah, I had my trade here because price had traded or rejected from that order block. I had my trade right here, and my first partial were here, and I'll explain why. We have this FVG here. Why is it important to me is that this FVG, if you anchor your fib from this high to this low, considering this range right here, is that we have this FVG in premium. And also in this FVG, inside this FVG, we have this relative equal highs. Having this relative equal highs, this is where I set my first partial right there and left the other one to take out the previous day high, right? Of which is my final target. I didn't really put my final target on relative equal highs. This was enough for me taking the previous day high, of which was on Wednesday. Um, This is where you could expect price to just reject from. You should really be careful of that. When price is in premium, you should expect to see price reject from it. So in this case, I was bullish, but anything could happen. This is the market. Anything could literally happen. So I had my partial here on this highs right there, paying myself and putting stop at break even to now leave the rest to take out the previous day high. And hopefully that trade was taken by some of you all, and some did not take it, but I hope you found this video very, very insightful. And what else? Okay, nothing. By the way, thank you for watching this video. If you reached here, really, really appreciate it for showing up to my first YouTube video. Thank you for watching. Be safe. Oh, not be safe sounds like ICT, but yeah, be safe.